Mike Henry, great to speak to you down here in Melbourne.
Thank you, Tiki.
Well, strong half-year results as expected on the back of iron ore, but you've been handed the business in pretty good shape, really.
I have, and it's so very, very strong half operationally as well. So it's not just prices. We had a solid operational half, actually 12 months now, but certainly during the half. And it's prices and operational performance coming together that's led to that 46% uplift in underlying earnings per share and the second highest dividend ever. And I don't think it gets much easier than this in terms of landing as the new CEO in role to have these sorts of results to talk about in my first results go around.
Well, in a way, that's right, isn't it? Because you have got this clear and present danger, haven't you, of which is one reason why the dividend was perhaps slightly less than expectations, which is the coronavirus. How are you going to handle it? Because won't it impact the second half?
It's been interesting, Tiki, because it's clearly a tragic set of circumstances in terms of the human dimension to coronavirus. The impact on our markets has been relatively muted. Demand has held up. We're moving all of our product. Prices have held up in part because of other supply side disruptions, and we're seeing no problems with receiving payment. And of course, it all depends a little bit on how long coronavirus continues on. But by our estimation, if it gets better contained by the end of this quarter, then we think things will hold up reasonably well for the remainder of the half.
What are your Chinese customers telling you? Have there been any calls for force majeure, break of contracts?
So our Chinese customers, again, of course there's been impacts for Chinese customers in terms of their businesses. We're seeing some inventory builds, but so far, products continuing to flow and no issues with payments.
So as far as any force majeure went, you'd obviously encourage a delay in supply rather than any break in contract.
Well, I think of course, we will always sit down and talk with our customers, recognizing some of them will be facing some pressures, but there's nothing out there currently that where we're seeing significant disruption to shipment timing or to product flowing. So like I said, it's been quite muted impact on our markets, and as long as things are better contained by the end of the quarter, we think that things will hold up for the remainder of the half.
Will that happen though? Because you look at some of the commentary around what's happening on the ground at China to supply chains. There is talk of government stimulus, isn't there?
So the Chinese government, as we all know, has proven very adept in the past at providing those small injections of stimulus and pulling the levers to keep the economy on track. There's nothing to suggest that this time it wouldn't be the same. Having said that, the other thing I would point to is BHP, given the portfolio of assets that we have, the very strong balance sheet that we have, net debt starting with a 12, even in circumstances where coronavirus were to continue on longer and there were some impact in the markets, we're better placed than most to handle that uncertainty and a bit of disruption.
Mike, what the virus has done, of course, is stop everybody focusing on trade and trade wars. But how do you see this year developing between the US and China?
Well, so of course, with the recent Phase 1 deal, I think that's lent a bit of support to the market. There's nothing to indicate that over the remainder of the calendar year, for most of the remainder of the calendar year, that things would change on that front. So, of course, bit of trade uncertainty, coronavirus uncertainty, but we have a very well-positioned portfolio and a strong, well-positioned balance sheet.
The question beyond the immediate, of course, is where you are now going to take this company. You've been on quite a tour of the assets. People are talking about where the growth will come from now.
So, you referenced the 5-week tour that I undertook of the business, and that's reaffirmed for me. We have great assets. We've got some of the best assets in our commodities in the world, and we've got great people. What I'm going to be focused on is exceptional performance and a winning portfolio. So I believe that there's still a lot more gas left in the tank on the performance front, and through the way that we go about engaging our people, the capability that we build on the front line of this business, and through the way that leaders support their people and really getting everybody across the company to swing in behind that frontline performance, that we'll lift performance further. And I want BHP to be unquestionably the industry's best operator. Safer, lower cost, more reliable, and more productive. On the portfolio side of things, we have a good portfolio today. Again, some of the best assets out there. But I look to the far future, and I want to see us securing more options in what I've termed future-facing commodities. So these are commodities like copper nickel, possibly potash. We obviously have a decision ahead of us in potash. But I'd like to see us secure more of those options to ensure that we can continue growing value and delivering great returns to shareholders for decades to come.
So you talk about performance edge, getting more from both your physical resources and your human resources. In times recently, the earnings have come from cost-cutting, a very successful cost-cutting exercise. You're now saying that you can actually increase earnings significantly by improving performance.
I'm saying that there's a lot more to come on the performance front in BHP. We've spent, and this is in spite of how far we've come, but we've spent a lot of time putting the foundations in place, getting the right portfolio, getting the right operating model in place. Now we want to make that system hum. And that's going to require us not just pulling big levers or doing things top down in the business. We have to harness the experience, the passion, the capability, and the commitment of all 72,000 people across BHP. And that is going to come through the way that they're led, through the way that we get everybody focused on a clear set of priorities. Everybody needs to understand what the priority is, what good looks like, and then they need to be enabled to chase after it.
Mike Henry, your predecessor will be remembered as much as anything for his disposal of a major asset, the shale oil in the US. You have to deal with thermal coal, which presumably you'd like to get rid of as soon as possible.
So thermal coal, very different circumstances. Thermal coal is a tiny part of the portfolio. It's less than 3% of assets. We own and operate one mine. We have a 1/3 stake in another mine. Of course, given the range of scenarios that we see for thermal coal, we think those scenarios are biased to the downside rather than the upside over the longer term. If somebody presented us with the ability to exit for value, we'd definitely entertain that.
Because it goes to everybody's focus on decarbonising at the moment and brand, I suppose.
But I'd bring it back, Tiki, to how we see commodities. So we do look at commodities quite fundamentally. And we always look at, do we like the commodity? Is the cost curve steep? How do we see long-run demand and supply dynamics? So it's against that backdrop that we would assess a commodity like thermal coal. And we see the cost curve for thermal coal being a bit flatter. The demand outcomes being, obviously a range of scenarios, but being skewed to the downside. Couple that then with the fact that it's such a small part of the portfolio. I think if there was if we were presented with the opportunity to exit for value, we'd consider that.
Do you think the BCA's target of net zero emissions by 2050 is achievable?
So I come back to what BHP controls and what we can do. And we've been clear about our intent to get to net zero in our portfolio. 2050 is a long way away. And there's actions that we have been taking. So well before some of the recent talk, we have been a company that's been focused on this and advocating for climate change action for many years.
And also for others, for your suppliers, Scope 3. How's that going?
For many years now. And we've reduced our own Scope 1 and Scope 2 in the past half, announced that we're moving to fully renewable power in Chile. And Scope 3, we have been working in the past with customers already on technologies to reduce Scope 3. We'll be doing more of that. We'll come forward later in the year with specific goals around Scope 3. And of course, we've announced a $400 million climate investment program as well, which will also help in that regard.
I imagine you're going off now for talks with your investors. Presumably, though, Elliott has already been in touch. Are you going to expect the same sort of heckling that your predecessor, Andrew Mackenzie, got?
Elliott's one of our shareholders, and of course we'll engage with them just like any other shareholder.
Mm-hmm. And so if I asked you to tell me about BHP in 5 years' time, will it be a very different company under your vision, do you think?
I will continue to build on the foundations that we put in place, and I do truly believe that this company has strong foundations. But I also believe that we've got a lot more potential to be unlocked. So what will BHP look like? It will be much safer. We'll be delivering results more reliably. We'll be lower cost. We'll be more productive. And we'll have more options that will sustain this company beyond the medium term.
So you might go broader than the current asset base that you've got right now. I mean, you talked about potash. You are a Canadian after all.
I am indeed. So potash, possibly, and obviously the decision that we need to take by February of next year, potash we like the commodity. It will only proceed if it meets the capital allocation framework. So if it competes well under that framework, and I, as a new CEO, want to personally get across the capital assumptions and the OPEX assumptions, so I can be confident in the investment case. Now, copper, nickel, pretty straightforward for us. We like those commodities. They'll help with the transition, and they'll benefit in a decarbonized world. We'll continue to revisit, commodities beyond that, and we'll always look at, do we like the industry? Is it a big enough market? And is the cost curve steep enough for us to secure rent? And of course, then, can we get our hands on some good assets, and do we have the capability to operate them well?
Finally, Mike Henry, back to the main game at the moment, which is our relationship with China, iron ore, obviously. Are you comfortable with the way that the government has handled the coronavirus, the Australian government? Because there has been tensions between the two countries on this, hasn't there?
So I think on coronavirus, this is something that obviously has created uncertainty for everybody in the near term, and people are taking appropriate action to contain that virus. For us as a business, and that's what I come back to, impact has been muted. That then has allowed us to deliver this great set of results we've just delivered, and we remain quietly confident about the remainder of the half, of course, subject to how quickly coronavirus is brought under better control.
Mike Henry, I look forward to covering BHP under your leadership. Good luck with it. Thank you for joining me.
Thanks very much, Tikki.